Cathie Wood just keeps buying Tesla stock. This is from yesterday, and this is from a day before yesterday. As you can see right here, $15 million. That's the fourth largest single purchase. And if you put together that $5 million from yesterday, yeah, it's quite a substantial amount. This is CNBC reporting today. Just from electric vehicles, it is almost a five-fold increase in this stock during the next 5 years, Wood said during an investor webinar on Thursday, meaning today. And if you believe autonomous at all, it's closer to 13 times during the next 5 years. So we are as bullish about Tesla as we have ever been. Wood previously predicted that the shift to electric vehicles will be drastic, resulting in 60 million EVs sold in 5 years. Last year, in 2022, we only did 7.8 million electric vehicles. Of course, a lot of the legacy automakers, they are not expecting that, and they will be caught off guard. In the meantime, Cathie is expecting $1,500 per share by 2026, I believe by the end of 2026. Tesla moved down in the fourth quarter, had a dramatic re-rating as the capitulation in the growth strategies was highlighted. Wood said the disappointments in China were well telegraphed. But she is selling other stocks to buy Tesla stock. She revealed that she has sold Exact Sciences and put much of those profits, of course, into Tesla. And Cathie also likes the aggressive price cuts. Tesla is going to be very aggressive in pricing, Wood said. Tesla can afford to do this. It's got the lowest cost structure and is innovating, we believe, the most aggressively. The other auto manufacturers are going to compete. They will have to follow these price declines, but it will hurt them from a margin at a profitability point of view quite significantly. And it could hurt Tesla a little bit, but it will totally kill a lot of these competitors. And also, here's something you don't really see often. The media liking Tesla. Barron's here is saying that Tesla price cuts aren't a sign of weakness. They are a show of strength. And Barron's here shows how some of the stocks have been affected, some of the competitors. As you can see, Tesla went up, well, the stock that is, and other companies, not really. They are falling. We do have a much more interesting graph that shows competitors really struggling, but looking at this previous graph right here, certainly these companies are going to be struggling. So far, these stocks have not dropped that much, with a few exceptions here, more at the bottom, more than 10% drops. Looking at this chart from Reuters, we can see how far ahead Tesla is. Now, this is right before the latest Tesla price cut, so these numbers will change for Tesla. Currently, the analysts are speculating that gross margins for the first quarter will still remain at 24%. The latest numbers that we have were at 27.9%, so that wouldn't be such a big decrease when speaking of profit. So these are the latest numbers that we can have, and we can see that other automakers such as NIO and XPeng, they are still losing a lot of money with every single vehicle that they basically sell because they haven't scaled yet. And they are really struggling. BYD doesn't make much profit at all, so they can't really lower prices much. We can lower the price a little bit, but not by a whole lot. And Tesla actually almost never sold any cars at these ridiculous prices that Tesla had, because we can see from multiple reports, if you watch the previous videos, where people that ordered cars before the latest price increases, they were getting deliveries in November. in the United States. So all of the deliveries happened to people that ordered all of the vehicles at lower prices. So that's why these margins are likely to remain fairly high. But of course, not that high. But still, Tesla is going to be leading the way, including discounting and destroying competition. This is some very important context, historical context for these price cuts. Henry Ford slashed prices on his Model T in the early 20th century as his innovative mass production system revved up. During the 1980s and 1990s, Toyota used the cost lead provided by its lean production system to offer features at prices Detroit automakers struggled to match. Now Toyota is rebooting its strategy under pressure from Tesla and is trying very hard to not go bankrupt. Because can you believe this? Toyota president says silent majority not convinced on EV only future. This is what happens when you stop innovating. We are regularly getting reports about tooling. We really need the Cybertruck, and it will be an important booster to Tesla stock long term. Elon today had an interesting conversation on Twitter, and he made a prediction, so you want to pay attention to this one. JP Morgan's CEO says that oil and gas will be necessary for the next 50 years. Elon responds, true, there will be a long tail of usage, but it will peak long before then. Elon says that peak oil demand probably happens within the next 5 years. Then there's a question I often wonder, do you think you are a genius? Elon says, no, I am wrong too often. We are also seeing a little bit of a backlog now in Europe. Tesla pushes back delivery times of Model Y in Germany after price cuts. So it went from February to March, from January to March. This is for the basic Model Y, but the other trims of the Model Y still have that same January to March delivery date. And here's what Morgan Stanley's CEO had to say about Elon Musk today.
Twitter's a great company, and let's be fair, Elon Musk is one of the greatest entrepreneurs and business people, in the last century. And that's not an exaggeration. Look what he did. Just take the Boring Company alone, let alone SpaceX, let alone Tesla. I mean, this person has extraordinary capabilities.
Tesla just started exporting vehicles to Thailand, and now we have the first shipment of these vehicles, so Tesla moves pretty quickly. It's a little bit sad, but also at the same time expected, and we will see more stories like this one. Arcimoto is on the brink of bankruptcy. The company dropped 60% in one day and is really on the verge of bankruptcy. It is down 99.64% from the peak. Expect to see more stories like that. It will take some time, and if you have a bad recession, there will be quite a lot of them. If you dislike Dan Ives, well, after this, you may change your opinion a little bit. Our proprietary China EV survey this week had nearly 70% responding that the most recent price cuts have positively influenced their decision to more likely purchase a Tesla Model Y, proving the price cuts have been a home run success out of the gates. China EV survey bullish for Tesla, says Dan, and here he continues, we were able to survey over 500 consumers ready to buy an EV in 2023 over the past weeks. Our survey found that 76% of EV Chinese consumers are considering buying a Tesla in 2023, with the nearest domestic competitors BYD in second place, followed by NIO in the third place. A relatively small sample, but the result is pretty clear, and really, we knew the result before we had these results from the survey. But having that reaffirmed, that is certainly not a bad thing. And these are 48 reasons why I only own Tesla stock in my stock portfolio. My name is Matt Posius. Like and subscribe if you haven't yet, and I will see you in the next video. Thank you so much for watching.